So in today's video, we are talking about the coming bear market and my cheat sheet for grabbing a quick pulse of the market. When is the bear market happening in my opinion and what to look out for? Like this video, subscribe to the channel, and stay tuned. Hey everyone, welcome back to the channel. If you're new here, I'm Patrick. I've been an investor for over a decade, an options trader and a crypto investor for 7 years, grown my portfolio to over $250,000, and I run Apex Wealth Collective, a school community for investors where you can follow my portfolio journey, see all of my buys and sells as soon as I make them, and get access to all of my YouTube content early. And if you want to support the channel, this is how you can do that. Personally, I believe we still have a ways to go in this bull market, even though prices across markets are hitting new all-time highs everywhere. So I'm going to give it to you quick and dirty. There's a couple of different economic indicators to pay attention to, so here they are and what to look out for in each. So to start off, these are Into the Cryptoverse risk charts. Now, Into the Cryptoverse is a charting subscription that provides risk charts for many individual crypto assets and crypto's total market cap. Now, if you look at previous points in these charts, here's Bitcoin, for example, you can see that near bull market tops, the risk values become red dots and the values get really close to or hit 1.0 at the very top. And these are by far the most valuable to me. I will continually update my school members with these charts when we do start hitting significant risk levels to the upside to start selling, and then later to the downside to start buying again in the bear market. Most risk level values are currently sitting in the 0.5 to 0.7 range. Very few above that and several way below that. So nowhere close to a top based off of these indicators. Next is the ISM. You guys have heard me talk about the ISM a lot in past videos, and basically all you need to look out for here is the 50 level. And if we're above it or below it. Below means economy not so good, above it means economy's pretty good. Really low levels are below 45 where you really want to be buying, and really high levels around 60 is where you should start looking to sell. Right now we are at 49.1, which means we are nowhere close to a top. And the economy has barely begun to take off yet this cycle. Next is social media sentiment. This one is super simple. If your algorithm on social media revolves around finance, trading, or investing, you will simply have to pay attention to if people are super bullish or super bearish. If there is nothing but horrible sentiment and doom and gloom on your timeline, it's time to buy. If there is nothing but ecstasy and everyone is screenshotting pictures of how much money they've made, it's time to sell. Next is the Pi cycle top indicator. This one's very popular in the crypto sphere, and it's basically two moving averages on Bitcoin. It is the 111-day moving average and the 350-day moving average. Now, when the 111 crosses above the 350, it marks a peak in the market, or sometimes can signal just after a top has been hit. So don't use this one by itself because it can lag by a long period. And sometimes, as you can see in certain bull market cycles, it actually crosses way after Bitcoin has topped. So again, don't use this one by itself. And lastly is the Federal Reserve cutting or raising interest rates. This one is kind of a laggard indicator as well and shouldn't be relied on solely. But if they are lowering interest rates, it is probably because they have to start rolling old debt into new debt, i.e. creating new money, so markets go up. And if they are raising rates, it is to tame inflation and to bring markets back down to earth, so markets go down. Now, you can truly use a million different indicators to help you know where you are in a particular market cycle. But these are the ones I stick to if I want to be able to check the pulse of the market very quickly, like under 5 minutes. You want to keep it simple because you can go crazy and you can get confused using too many of these indicators and just waiting for them to all line up perfectly. Now, if you have stuck around this long, go ahead and catch another one of my videos right over here, or check out my channel over here where you can take a look at all the other content I have to offer about investing and my personal investing journey. Now, that's all for me today. I'm Patrick with Apex Wealth Collective. Take care, and I'll see you guys in the next video.